How do you actually see this U.S.-China kind of a double play? Is it, can it be resolved even with smoke and mirrors, or is it just going to get worse?
Well, I think, when I talk to our clients, it's certainly top of mind, whether it's clients in Europe, certainly clients in Asia. I was in Asia at the end of the year last year. It was actually before the G20, but people were very focused on it and very bearish on it. I think things have moved on since then. It's looking more promising. And, fingers crossed, I think there has to be some movement there. President Trump did put something in the sand and a deadline, so we'll see how things develop. But clients are very focused on it.
I mean, how much are they focused on that compared to, for example, Brexit? And what do you tell them if it's your number 1, 2, 3 risk? Yeah. There's no real way of protecting you against an escalation of a trade concerns.
Yeah, I mean, I think there's no shortage of things for clients to be focused on and worried about in these moments. But certainly Brexit is up there. China trade war is up there, and I think you see that and that kind of worries and those fears and those uncertainties playing out in markets and in movements of money. And certainly we've seen a huge movement in U.S. dollars, for example, money going into U.S. dollars, into money market funds and other short duration products, which are a reflection of uncertainty and some fear and worries.
So if you look at, what your clients worry about the most, is it, globally, is it the U.S.-China, or is it also your Asian country? There is a line of thought that basically thinks that because China's slowing down, and because of the trade war, they are focusing domestically, and so aren't actually able to help the rest of their neighbors as much as they used to.
Yeah, I think they're probably, if you're large global multinationals, you're worried most about China. That would be top of mind for them. I think when you see uncertainty, you see cash building up on corporate balance sheets. They're not, doing CapEx. They're putting off projects. They're putting off things until they get a little bit more certainty as how things are going to play out.
Okay, so what's the risk of a recession in the next 18 months?
I'm sorry. Oh, risk of a recession. That's a great question. I think that the markets have priced in more of a risk of a recession than we feel there is. We feel this year no risk of a recession. We think obviously global growth is slowing, but it is still growing. And my colleagues at Goldman Sachs actually did some great research in looking at what are the factors that have caused the last recessions. And if you look at them, there were 5 key factors that were looked at, and some of them have actually structurally changed. So things like U.S. dependence on oil or, inventory buildups. With technology, those have kind of become less important. And then some of the more financial triggers, like, huge imbalances, we really don't see that playing out. We think the U.S. consumer has a pretty healthy balance sheet these days. So again, those recession risks that markets looked at and were pricing in and were getting very nervous about as you went into the end of fourth quarter last year, we think a little overblown. So we don't see a risk of a recession this year. Obviously, we do see growth slowing. That risk probably goes up next year, but not this year.
I mean, does, the slowdown, how much bigger is it if we don't have some kind of compromise between the U.S. and China?
Yeah, that is a risk to the growth story, right? We do think growth will continue positively in the U.S., in Europe, but I think if this does spin out of control or we don't get some, positive movement on trade, that's a risk to the growth story.